This is Ranger Kidwell Ross, editor at worldsweeper.com, but more importantly, the director of the World Sweeping Association. And as a courtesy to our members, we're expanding on our understanding of the very complex topic of insurance. And we have with us again today, Phil Duncan. Today,
Hello.
Hey, Phil.
Hello, Ranger. How are you doing today?
Good. It's good to have you back.
Thank you.
So you, before we began the recording, you taught me a couple things that I had no idea already about how the insurance program works. And we evaluated it and realized that this is going to be at least a two-part series on auditing. And this is kind of an overview so people understand the audit process as it applies to the insurance coverage that they have. And I'm somehow reminded of that clause that I see so often with insurance, which is don't just take your agent's word for it. Read the document, because that's what you're really signing is the document, not that your insurance agent bought you lunch today. So
Yep.
With that, go ahead and talk about some of the pitfalls that you see in the audit process and what contractors are beholden to when they get their insurance policy that they might not know.
Yeah, let's do it. So first and foremost, it's good understanding to know that these insurance policies that you buy, they're unilateral contracts. Like the insurance company sets all the rules, and the rules are favorable to them. So when you sign an application and you give the insurance company money, you agree to everything that's in the policy that they send you. And they put a lot of little rules in there that you may or may not even be aware of it. And your insurance agent most likely is not going to tell you everything that goes through the policy. They usually put the burden in your hands and say, hey, here's your policy. Read it if you want to. Call me if you have any questions. So the idea of this discussion was to help the sweeping contractor be aware of a challenge or a problem that they may have come up against, which is an audit, and how these insurance policies are structured, so you know what to look for, be prepared, get you prepared to handle an audit, and then also some kind of preventative medicine to not have audit headaches. So I think our intention is to kind of start off kind of session one to just kind of give you an overview of what these insurance contracts say, what your responsibility is, and then maybe part two we can go over a couple different policy types, show you that same exact language, and then give you some best practices on how to deal with the audit, beforehand, or deal with the audit when they come at you after the policy expires. So yeah, that's what we're gonna jump into. And I think the first step, Ranger, that we talked about is let's go to the Oracle, right? Let's just go to the source. So I'm going to share.
You have a document up that is an actual insurance policy, and a way to think about this for our contractors is, you complain about the third-party vendor contracts and you read them and they have these, bad, unquote, unquote, clauses in them. And we've recommended through a variety of different articles to the association members about crossing them off and initialing them and seeing if the third-party vendor will live with that. That's not probably going to happen with the insurance company.
No.
It is their contract, and that's the end of story. So here, Phil will show you some of the things that are in the contract or your policy, and talk to you about what you should do now that those are in there.
Excellent. So I'm gonna go with a general liability policy. This is the policy that you purchase that covers third party in the event of bodily injury or property damage. So if you're on a premise and you do some damages to some of the building, or some of the, like a light post or something, you run into a light post, or you run into a car that's parked in a parking lot, or you just cause any sort of property damage to the third party, this is what general liability covers. You're never really going to be the beneficiary of a general liability claim, other than the insurance company, paying for your defense against a lawsuit. So general liability, it's probably helpful to understand like how they come up with the premium. That's like the money that you pay for the policy. So typically general liability is rated on three factors are the primary ones. The first is like your revenue, your gross revenue. So it's not your profits. They want to look at all the money that you took in, and they may charge a rate based off of how much money you took in, not how much money you make. Which is, I do come across individual business owners that they said, well, I only made 100,000, but it took them 250,000 to make that 100,000. The insurance company doesn't care about how much you made. They want to know, they want to know all the money that went through your books, because that's how they calculate their exposure. So what the first kind of method that they might come up with premium is they're going to times some rate that they have based off of your gross receipts. The next rating basis they might use is payroll, like how much you pay your employees. So they'll just and they will also even assign a number for you as the owner, as a business owner. They're gonna give like an executive wage, and then they want to know the payroll wage as well. So even if you're an owner operator, you have no employees, they're gonna get some number. Every state's different. Every insurance company has their own different, minimum payroll number that they'll use, that they'll assign to the owner. But they're always gonna add an owner number on, and then they're gonna if you have employees, they're gonna tack that employee payroll on top of the owner payroll.
So let me ask you a question. Is there anything that a contractor can do to moderate what the percentage payment is? In other words, if you've had a lot of claims or a serious claim or something like that, it's probably a bigger multiple of your gross receipts that they use as part to calculate your premium. Would that be accurate to say? So depending on what your rating is as a company, is there anything you can do? Like if I came to you and said, is there anything you can do to improve my rating to a company? Is there any, or is that just kind of in stone because I had the accidents?
There's a couple things. So usually what they'll do is they'll give you a discount for being loss free, for not having claims. So if you have a claim, you just lose that discount. So they don't, and then sometimes some insurance companies will give you a surcharge that if you have a claim. So it's one, you'll lose your discount. In a claims free discount can be as high as 50%. They might give you a 50% rate reduction because you haven't had any claims. And then it goes the other way too. They can do a surcharge of a 50% surcharge because of a claim too. So that can be a pretty big swing for claims. So yeah, that's the way that the factor works. They're gonna have a rate. They're gonna times it by the rating basis, and then they're gonna times it by a loss, a credit or a debit based off of your experience, your years in business, a couple other factors, how many years without claims, things like that, and that can be either good or bad. Now, to answer your question directly, if you do have a claims history that's following you and it's causing your rates to go up, there's two options really. There's one, go find another insurance company that is not going to punish you or has better rates and is not going to punish you for the prior claims. Or the other option is to, if they're significant, it might make sense to reestablish the company, go start a new company and sell like all the assets, transfer it all over to the new company, and just apply as a new venture to a new insurance company. And if you do that, obviously there's a lot of work that needs to be done. You're going to have to go change your contracts. You're going to have to inform your current customers like, hey, we changed the name of our company. Here's the new contract that we need. You won't necessarily be able to use all those old agreements that you have in place if you go that route. So if you do that, it better be well worth it. Not only are you going to have to pay the cost of forming a new company, but any DBAs, any of the legal fees that you have to do to set that up, and any CPAs that you're dealing with to deal with tax ramifications and all that stuff. There is that is a way to approach another insurance company, and then at that stage you're approaching as a new venture with no prior claims because it's a brand new company. And if you do go that route, just make sure you don't reference the old company and or have a skilled insurance agent that's not going to go tell the new company that you used to be this old company and you're just trying to avoid claims. So does that answer, give you kind of a...
It does, yeah.
Yep.
Yeah, it does. And, what you have on the screen here is something that I didn't realize in the first line of B. Why don't you highlight that, if you can? The premium shown for the coverage part is a deposit premium only. So, and they're saying that at the close of each audit period, which I don't know if that's quarterly or or yearly or whatever, but it looks as though the added actual premium will be based on actual gross receipts. And before we had estimated what our gross receipts are. So if we grow the company significantly at the end of the year, we can get a surprise addition to our premiums on the insurance. Am I accurate with that?
Yeah, 100%. So that, and that's kind of where, if you're aware of the issue and you know it beforehand, you can kind of prepare for it. And if you're thinking about your insurance when you're running your business, like who does this? Nobody does this. Like, it's been 6 months since I bought my policy. I wonder if I've gone over my estimates. If that's not a practice that you've instituted, you're not just going to automatically be aware that you should do it. So typically you just, like the typical sweeping contractor will get a notice from the insurance company at the end of every year saying, hey, we need this stuff from you. We need a proof of how much you made. And then all of a sudden you're getting a bill that's due immediately. Like, audit premium is due and payable immediately upon notice to the first named insured. So to answer your question, yes, first, they're estimates. When you bought this policy, it's just a deposit. It's an estimate. And then at the end of the policy term, and usually that's, most insurance companies audit their policies annually. So they wait for the entire year to go through, and then they'll audit, and they'll say, okay, from, let's just say your policy started on January 1 and ends on January 1, just for the sake of discussion. They're gonna want to see all of the revenue, the payroll, all the tax documents, everything that your company did from January 1 to January 1. And then they're gonna go calculate it based off of their rates. And if your estimate is, if your estimate receipts were less than what you actually did, they're gonna ask you to pay them more. and the problem is that if you don't pay them this additional premium, they can start making your life miserable. They can put you in collections. They can cancel your existing policy. Even if you've paid for your renewal, if you don't pay the audit, they can cancel your existing policy. And with liability insurance, not paying an audit can be very problematic, because not only they can actually deny coverage on work that was performed during the audit period if you didn't pay the premium for it. So for instance, let's say you estimated that you did 100,000 in sales in the policy term, and then they do the audit and it turns out you did 500,000 in sales. Well, the insurance company is on the hook for all $500,000 of work. Once they do that audit and they notify you and said, hey, you actually did 500,000, you owe us this extra premium. If you say, you know what, I ain't paying you, I didn't have any claims, I'm not going to pay that audit, you're nuts. They can now use that as a reason to deny any claim that happened during that term, because you only paid for 100,000 worth of insurance, but you actually performed $500,000 worth of insurance. That's why they make this audit premium due right upon notice to you. So to this point, there's insurance companies are very easy. It's very easy to give them money. It's really hard for them to give you back money. And even though there's this little disclaimer right here that says if the audit premium is a lesser amount than the deposit premium, we will refund the difference if the policyholder is current on all payments and deductible payment obligations required to be paid to us. So not all insurance policies are written the way that I'm showing you right here. Sometimes they fully earn that deposit premium. So let's say that you estimated that you did 500,000 in sales, but a pandemic hits and you only did 100,000 in sales. And they do the audit and you can show like, hey, I only did 100,000 in sales, give me back my money. Not every insurance company is as nice as Nationwide is right here. Some of them, they have a stipulation in their policy that says deposit premium is fully earned at the expiration of your policy term. So you're not going to get a refund from that specific insurance company. Every insurance company is different. So and there's several hundred insurance companies out there that insure sweeping contractors. So I can't tell you, specifically if your policy, if your premium that you paid is fully earned, or if they'll do a refund to you. That's a question that your agent can answer for you. So the idea is keep in mind that these are estimates, and if you're not going to reach your estimate, it's halfway through the year and you projected 500,000 in sales and you're only at 50,000 in sales, that's probably a good reason to call your existing agent, call your broker up and say, hey, I thought I was going to do 500,000 in sales. I'm nowhere near this. Can you let the insurance company know right now that I'm not going to be hitting those numbers, and to reduce the numbers. And that if you let them know before the expiration of the policy, the insurance companies can only take kind of premium that's earned. You have more leverage while the policy is in force, not while the policy expires. So let me show you what you're required to provide these insurance companies. So this is in a contract with them. So when you signed an application and when you gave them money to pay for your premium, you agreed that should they request it, you have to provide these items, and they have to be made in a reasonable time frame. And I'll let you know this: if you don't provide these records, they have the authority to just make assumptions, and they can just say, you know what, we know that on average we insure 1,000 parking lot sweepers, parking lot sweeping companies. We insure 1,500 road maintenance contractors, and on average their average gross receipts are $1 million. We're just going to bump you up to to be what the industry average is. So if you do not provide them the information they request, they can make assumptions, and then you have to go and fight that. And you're going to have to provide all these documents to justify why they can't do what they're doing. So here's a list of some of the items that they're gonna ask for you. They're gonna want, checking account records, ledgers and payroll records, tax returns, payroll records for employees, any invoices, any accounts receivables, payables, copies of contracts that you have with your clients, any and all financial documents of the first named insured, all records of contracts with and payments to subcontractors, as well as certificates of insurance received from subcontractors. So if you happen to do work and you farm it off to another sweeping professional, or maybe you subcontract the striping work, or you subcontract the leaf blowing or some other component, the landscaping, maybe you go and get a job and your job is to maintain a facility, and it's more than just the road maintenance component, the parking lot maintenance component. Maybe in that contract you do some minor landscaping and some some painting and some oil removal or whatever stuff you might do in addition to just the sweeping component. If you're using subcontractors, they're going to want to have records of all your contracts with those subcontractors. They're going to want to make sure that that subcontractor that you're using has insurance. And then if you do not provide an evidence, like just because you 1099 someone doesn't mean that they're to an insurance company, they don't care if you 1099 or you W-2 them. If you're going to 1099 someone and say they're a subcontractor, your insurance policy says that you have to get an evidence of insurance for them. They have to have their own insurance. If they don't have their own insurance, the insurance company is going to treat them as an employee, and you might get an extra bill from that work that was performed by that subcontractor / 1099 employee. This holds true for both general liability, and it's even more prevalent in the workers' compensation world. If you're 1099 an employee and they don't have their own insurance, your workers' comp carrier is gonna ding you. They're gonna charge you for that 1099 subcontractor. So they have complete authority to all that. You have to give them in a reasonable time frame, and they can come at any period at any time during the policy period, and usually up to 3 years after the policy term. They can come in and audit you at any time. So not only do you have to keep these records kind of handy, you have to be able to provide them up to 3 years after the policy expiration date.
And reading ahead, I noticed that on F2, what happens if you don't do it? They can have a court proceeding or charge you 100% of your initial premium. So basically double your premium because that's what you didn't provide the documents. So they're just going to double your premium payable immediately.
Yep.
Well, in 30 days, it's saying. So yeah, that's a real good overview of the audit process. I didn't really realize that whatsoever. I thought your premium was your premium, and it makes sense that you would have certainly, and that the insurance companies would have an out, so to speak, if somebody's not telling them the truth. So
yeah.
And what would happen if you went under a new company, and then at some point the insurance company found out that you'd had some serious accidents as an old company? I mean, they always have the right to cancel you, I know. Yep. But is that likely to happen? I mean, is that another risk factor?
Yeah, it's at that insurance company's discretion. If they may ask a question on the application that says, have you or any of your affiliated or any of the officers of this corporation been affiliated with any other insurance, similar business or something like that?
Yeah.
If they ask the question and you don't answer it truthfully, then they can use it for a reason to cancel if you did that route. But if they don't ask the question, you don't have to volunteer it to them.
Mhm.
So my advice to anybody is only answer the questions the insurance company asks. Don't ever just feel like you're doing them a favor by giving them, every single, every little piece of information you possibly can. Answer the questions that they request on the application, because the first thing that an insurance company is going to use is that application to either come up with a reason to charge you more money, or they're going to use it for a reason to deny an insurance claim. So if you give more, you're just giving them more ammo to use against you. But if they ask the question and you don't answer it, they may not issue the insurance policy to you. So usually the questions they require are like that are on your insurance application are required to issue the policy. So just make sure you just answer every question truthfully, and that way, if there is a claim, you can always go back to that application and say, hey, I told you this. So let's say that one of the questions was, have you, in the past 3 years, have you ever owned any similar company? And you say, yes, we own this company over here, but we closed that company down and started a new company, and it's this company here. And they issue the policy with that answer you gave them. And then it comes out down the road, you have another claim with this new company. They can't go and say, hey, you didn't tell us you had another company. You can even reflect back to the application that you signed to purchase the insurance and show them that, I notified you. I told you that. If that wasn't an acceptable response, you shouldn't have issued this insurance policy to me. You had no problem taking my money, and you had no problem issuing me an insurance policy, but now you have a problem of paying a claim on an answer that I've already given you. That an insurance company doesn't have the wiggle room to get out of that type of response.
Okay, that's excellent. And so I'm brought back to that old adage that honesty is the best policy, and that must have come from the insurance industry. That's all I'm thinking. Is there anything else we should talk about on our overview to these audits, or is that pretty much cover it?
Yeah, I'll add to your adage, like, not only is it's honesty is the best policy, but also don't just give volunteer information to an insurance company. If they don't ask for it, don't provide it to them.
Okay.
Yeah, don't give them too much information. Only give them the information that they ask for, and just be truthful with what you're giving them. Because ultimately, like, your insurance agent, even though that they're trying to sell you a product, they're also your best advocate for this. You don't want to make the insurance company or the insurance agent your enemy when you're dealing with a claim, or when you're dealing with an audit. You want to be as chummy with them, as friendly as possible. And then if you don't get what you want, and they're doing something that's like an injustice and it's unfair, well, then at some point you can break, and you got to switch your hats to, like, okay, now you're becoming adversarial, and I'm going to be adversarial too. But during the audit stage, during the claim stage, my advice is to be as cordial as possible until the audit's complete, or the claim's resolved in a matter that's satisfactory. If the audit is complete and it's not satisfactory, and the insurance company and your insurance agent's not helping you out, then it's time to start launching Scud missiles. But until you get a document that says this is final, we're not changing it, my advice is to keep a positive relationship with all the people that you're interacting with.
Okay. Yeah, very good. You can not share your screen,
Okay.
and we'll sign off Here to say thanks. That was excellent information. I can't believe that I didn't know some of that info after all these years working with sweeping contractors. So very good again. And then we'll come back with part 2 of this, which will be, well, you say what
Yeah.
you're going to do with
Yeah,
this.
well, we can go through like a couple different, so this was just a general liability policy. We can do kind of show you how workers' comp audits work, how commercial audits work, commercial auto audits work. And then the idea too is kind of some best practices on how to prevent like surprise bills, and then some solutions on what you can do when you get that final audit that's due in 30 days. There's some things that we can talk about how you can not, because those sometimes those invoices are pretty substantial, and this is also coming right around the time that you just did the insurance renewal. So you're paying your new policy and you're paying an audit policy, and you still have all your other bills to pay. That might not be feasible. So that there are some ways to handle the burden, the payment burden, and we'll go through some of those solutions.
Okay. That's great. Well, thanks again, Phil. And, this has got to be very informative to our contractors. So thanks.
Excellent.
Appreciate it.
Thank you for having me.
Sure.
Have a good one.